Over $450 million in crypto was liquidated in just 48 hours. Bitcoin dropped below $100,000, and it's not over yet. Are we entering a full-blown crash, or is this the last chance to buy before the next breakout? In this video, we'll break down what's behind the crash, which altcoins are exploding, and what's coming next for crypto.
Crypto's moving fast. Don't get left behind. At Crypto Market Today, we break down the chaos and tell you what really matters. Straight, sharp, and constantly updated.
This week, the crypto markets have seen major turbulence. Let's start with Bitcoin. Over the past few days, Bitcoin dropped from over $106,000 to below $103,000. On some exchanges, it briefly fell under the psychological mark of $100,000. This drop triggered over $450 million in liquidations, mostly from over-leveraged long positions. Several factors played a role in this sharp move. First, there's continued macroeconomic pressure coming from the United States. The Federal Reserve has hinted at potential interest rate hikes, which has made investors more cautious. Second, geopolitical tensions in the Middle East, especially between Iran and Israel, have increased market uncertainty. And finally, on-chain data shows that large Bitcoin holders moved significant amounts to exchanges, a signal that some whales might be preparing to sell. Despite the drop, many analysts believe this is more of a short-term correction than a full trend reversal. With Bitcoin's next halving on the horizon in 2028, long-term sentiment remains largely optimistic. Moving on to overall market sentiment. The Crypto Fear and Greed Index currently sits at 48, a neutral to slightly fearful range. That means many investors are watching the markets closely, but not acting out of panic. Search interest for terms like Bitcoin crash has noticeably increased. Trading volume has also risen, with a higher number of short positions being opened. For many, this is a time to stay cautious and avoid high-risk strategies like high leverage. Dollar-cost averaging remains a popular approach in uncertain markets. Let's take a closer look at the altcoin space. Not all coins are following Bitcoin's direction. In fact, a few altcoins have had strong performances despite the broader downturn. One of the biggest movers has been AERO, which surged more than 40% after being listed on Coinbase's Base network. This move generated strong interest, particularly within the DeFi community. Kaya is another standout. This lesser-known token gained over 30% in just a few days. It broke through key resistance levels and benefited from new exchange listings, especially in the Asian markets. Toncoin, which is connected to Telegram, has also seen steady growth. Its integration with Telegram bots has increased both its visibility and usage. On the other hand, Shiba Inu continues to struggle. The token is down nearly 14% this month. Data shows that about 65% of Shiba Inu holders are currently sitting on losses. As hype fades, meme tokens like SHIB are losing ground to coins that offer real-world utility or strong technological backing. Now let's turn to regulation, where some important developments are taking shape. In the United States, the Senate has passed a bill known as the Genius Act. This legislation focuses on the regulation of stablecoins. It requires all stablecoin issuers to maintain full reserves, undergo monthly audits, and publish transparent reports. Supporters believe this will increase trust in the stablecoin sector and encourage more institutional adoption. Meanwhile, in Europe, Norway has announced a temporary ban on new crypto mining projects that consume large amounts of electricity. This ban is set to begin in late 2025 and is part of the country's efforts to reduce energy consumption and address environmental concerns. It could set a precedent for other European nations to follow. Looking ahead, what's next? In the short term, Bitcoin is likely to continue trading within a range between $99,000 and $107,000. Altcoins will likely remain split, with utility-based projects outperforming hype-driven tokens. Over the next few weeks, watch for activity around Ethereum Layer 2 solutions like Arbitrum, Optimism, and Base. As Ethereum becomes more congested, scaling solutions are becoming increasingly attractive to both developers and investors. And finally, some historical context. When the Fear and Greed Index sits in neutral or slightly fearful zones, the market tends to rebound within 30 days in more than two-thirds of cases. While nothing is guaranteed, it's a useful reminder to stay focused on long-term strategy rather than short-term noise.
That's all for today on Crypto Market Today. The markets are moving fast. Stay ahead by subscribing and turning on notifications. Drop a comment below. Are you bullish or bearish this week? Thanks for watching and see you in the next big update.